The story for the last 2 years is how great technology stocks have been, and they really have been great. But the last 30 days may be setting up a different trend. If you look at the Dow in the last 30 days, the Dow has actually outperformed the S&P and the Nasdaq by a considerable margin if you compare the Dow to the Nasdaq, almost a 4% differential in the last month. And if we look at where this trend is headed, I think part of it has to do with how overpriced the NASDAQ is. A lot of these technology stocks are really highly priced and they're beginning to come down quite a bit. Now, is it a good time to put more money into Dow stocks? Maybe. What's the Dow all about? The Dow is made up of 30 companies. These are well-established companies. You probably know every single brand that's listed. And it's a pretty good, safe investment, if you ask me. I've been buying into several Dow companies, and I wanted to show you the four companies within the Dow that I'm investing in and I continue to buy shares in. The first company that I'm going to go over is Chevron. Chevron is one of the big oil companies headquartered in the United States. It's second to Exxon in the US. This is a consistent, high cash flow generating company. They also pay a really nice dividend. Over time, they've appreciated well. Oil prices are doing fairly well, and this company, I believe, is discounted by 61%. So I'm going to continue to accumulate shares in Chevron. I believe that Chevron is in the green quadrant of desirability. And the reason for that is that you just can't find more reserves on Earth. They're all locked up by either a big oil company or some government like Saudi Arabia. And you can't find any more places to explore. That said, that's a huge barrier of entry for Chevron. So that's one of the reasons why I invest in Chevron and have it as a long term hold. The next company in the Dow that I'm investing in is Cisco. Cisco is a huge company in the networking space within technology. This company really helped build the internet and has continued to be a leader in networking technology. They've broadened out into other areas of technology. They're trying to get more into a subscription based business so they can have consistent revenues. They tend to be an infrastructure play and they're trying to balance out their business. Over time, I think the business has really struggled at times to grow, but they're doing fairly well now. And I think they're discounted by 43% if you look at their free cash flows as well as their earnings per share. This has been a consistent free cash flow generator. They pay a nice dividend. This is one of the leaders in networking, and I put them in the moderate desirability quadrant. At one time, they were in the green quadrant, but geez, technology is so darn competitive that now Cisco has a lot of competition. I would say that they're still one of the leaders, but you can't say that they have a monopoly-like competitive barrier against competitors. So I put them in the gray, but I still think they're very desirable because they really produce a lot of free cash flows. And if I buy Cisco at the right time, I can really see good appreciation out of this investment. So I continue to buy into Cisco. Right now, it's a small position, but I continue to invest in this great company. Another company that is in the Dow that I continue to buy shares in is Nike. Nike is the leader in athletic footwear and fashion. The Olympics are around the corner, and you better believe the most recognized logo during the Olympics will be the Nike swoosh, and they'll get a lot of press and publicity. The biggest athletes want to be sponsored by Nike. Nike really took over from the big giants that were Adidas and Converse way back when, and they signed huge athletes, the biggest one being Michael Jordan. But since then, they always lock in the best athletes so they can get the best exposure. This company is far and away the leader in athletic footwear, and I put them in the green quadrant. And the reason for it is their competitive advantage is their brand, their manufacturing supply chain, their exposure to retailers. Retailers love having Nike on their shelves. It's a brand that really brings a lot of equity to those retailers. So overall, their network value is huge, and that's why I put them in the green. I'd love to accumulate a lot of shares of Nike. I have a small to medium position in Nike of about $15,000 right now, and I'm building it up. I could see myself owning $100,000 or $75,000 of Nike at some point. I'm going to build it up over time. I like to dollar cost average my investment in companies. And in the case of Nike, I continue to buy shares because I believe they're heavily discounted. In fact, I think they're discounted by 64% if I look at their free cash flows and their earnings per share. The stock has been beaten down this year. They've had some bad press and they haven't been growing, but their sales are still really high and compared to their rivals, way and above their levels. So I continue to believe that this is the leader of the space. They will rebound and they will reward my investment over time. And the fourth and final Dow company that I continue to accumulate shares in is Intel. And this is a rebound story for the once leader in the semiconductor space. This is the company that built the PC era, and they still continue to control good market share of the PC market. The good news is the PC market's rebounding. It had a lull right after COVID because during COVID, it seemed like everybody needed to upgrade their PC, which created a boom for Intel. And then there was a lull, and now PC sales are beginning to pick up again, which is good. Overall, I think it's heavily discounted. The Intel stock is discounted by 70% if you look at their free cash flows that I project the company will have, as well as their earnings per share. Overall, I think the semiconductor space is overheated, but in the case of Intel, they're a rebound story, and PC sales are going to carry them upward and onward. So I continue to accumulate shares in Intel. I think they're a moderately desirable company. I put them in the gray of my quadrants because they do have a lot of competition. A lot of competition from AMD, as an example, and other players. It's hard for them to grow because semiconductor is profitable. Although it's cyclical, it is profitable. And their brand has taken a hit. They certainly are not the leader anymore. They were once the 800-pound gorilla in this space, but no longer are they that strong. They continue to have great credibility in PC and servers, and we'll see if they can make a good name for themselves in the new AI data center build out space. Overall, I could see myself owning a big portion of Intel, but they'll have to earn my capital. Right now, I've got about a $15,000 investment in Intel. I'd like to grow it to maybe $20,000 or $25,000 and really kind of take it slow. Intel has had some brutal years in the past, and I'd hate to have my capital really taken away because Intel drops the ball. But we'll see if they continue to do well and continue to build their business out. They have an exciting new foundry that's going to be domestically located. I think if they could pull that off, that'll be great because I know that a lot of chip companies get their semiconductors produced in Taiwan. Got nothing against Taiwan, but there is some geopolitical tension that could really put a strain on those companies. Intel making chips domestically would take that risk off the table for a lot of companies. And I think that's a really good idea. I hope it works out because they're going to create a lot of jobs, and we'll see how that goes. So those are the four companies that I really like that are Dow companies, and I continue to accumulate shares. And it could be a good idea to rotate some of my, especially technology investments, and rotate some of that capital into some Dow-based companies, especially since we've had a wonderful 2 years with great appreciation on those technology stocks. Well, that's not going to last forever. Technology tends to be in somewhat cyclical. You have boom periods followed by a few bust years. And we may be seeing the beginning of a downtrend or a correction. And it'd be good to rotate into those Dow stocks to protect my capital and continue to grow my portfolio. So those are the four stocks in the Dow that I am buying. Hope you found it interesting. Keep in mind, I'm an individual investor. I do not make any financial recommendations. I provide no financial advice. I don't recommend you hold, sell, or buy any of the stocks that I just covered. I'm just sharing my experience as an individual investor. Thanks for watching.